Greetings, everyone. So we now proceed to the second component after understanding the basic salary. The second component of the salary, that is income from allowances, that how allowances also become a part of the salary. So in addition to the basic salary, the employee often they receive certain regular monetary payments from either employers to meet their specific personal or work related expenses. These payments are called allowances. So allowances is actually it is a fixed amount of money paid regularly, usually monthly, by the employer in addition to the basic salary. So it is generally given to meet certain maybe specific requirements which are connected with the performance of duties, or to compensate for some higher costs arising due to the nature of employment, or maybe place of posting, or maybe some personal circumstances. For example, maybe house rent allowances, which we in short we call it HRA. It is paid to the employees to meet rental expenses if they live in a rented accommodation, while a transport allowance helps them to cover the commuting cost. That is, maybe it is coming from home to office every day. Maybe there are other type of traveling expenses that are also allowances that are also allowed. Under the Income Tax Act 1961, we can say that all the allowances are considered part of salary income. However, their tax treatment depends on their nature and purpose. So accordingly, allowances are classified into three categories. On the basis of their taxation, we categorize them under three broad categories which are before you. That is fully taxable allowances, allowances which are exempted to a specified limit, or maybe we call it partially taxable allowances or partially exempted allowances. And next we have the fully exempted allowances. Let me give you a very brief about each one, what they are and how they are treated. For example, the first category, that is the taxable allowances, the fully taxable allowance. So these allowances are fully added to the taxable income of the employee. For example, maybe we can say dearness allowance. It is paid to compensate for the inflation or high cost of living. I hope you all understand that. Maybe you read in the newspapers that the inflation has come up to this level, things are so expensive. So in order to compensate that, or in order to make up for, or maybe make the real income equivalent, this dearness allowance is paid to the salaried class, so that their purchasing power, or maybe their basket of consumptions remains constant or same. Then there is a city compensatory allowance, which is fully taxable, which we also call it CCA, City Compensatory Allowance. It is given to employees who are posted in metropolitan cities. Then there is an overtime allowances. They are paid for working beyond the normal hours. Actually, these payment also motivate the employees to work, to provide extra services also wherever it is required. Similarly, some companies provide tiffin or lunch allowances. It is paid for, there are also servant allowances, there is a warden allowances. So these allowances are there so that the person in order to get a employee's loyalty maybe, and their satisfaction level is improved. For example, suppose if somebody receives rupees 5,000, an employee in a company receives rupees 5,000 per month as CCA, then the entire 60,000 per year will be fully taxable under the head salary. So no doubt these are the extra payments given for certain specific purpose, but they all are fully taxable as per Income Tax Act. Coming to understand the partly exempted allowances, or maybe exempted up to a specified limit, these allowances, they are exempted from taxes up to certain limit, as they are prescribed under Section 10 of the Income Tax Act. It says that any amount received beyond that limit, it becomes taxable. For example, maybe HRA, house rent allowance, under it is exempted under Section 13 subsection under Section 10 subsection 13A, subject to conditions related to rent paid and the place of residence. How to calculate the exemption part, we'll be learning soon. Second is your city children education allowance. For example, whatever allowance company pays in order to continue the education of the children, it is exempted up to rupees 100 per child per month for a maximum of 2 children. Similarly, we have hostel expenditure, which is equivalent to rupees 300 per month per child up to a maximum of 2 children. Then we have the transport allowances. Transport allowances are exempted up to rupees 1600 per month for general employee. It increases for differently abled employees. So this way we see that again these are the provisions or allowances which are provided by the bosses or the company employer, but they are taxable only partly, not completely, as against the fully taxable allowances. Then we have fully exempted allowances. What are they? These allowances are completely exempted, means whatever facility or whatever allowance is given to the person, they are totally, you don't have to pay taxes on them. It is due to their nature or due to the category of the employees receiving them. For example, allowances received by some government employees who are posted abroad. Then sumptuary allowances paid to judges of the High Court or the Supreme Court. So the allowances which are received by the employee of the United Nations, that is UNO. Uh, Sometimes, suppose somebody working in Indian embassy and they are posted abroad in some other country, and he is getting an allowance of rupees maybe 1 lakh or 2 lakh per month, it will be totally exempted. No taxes will be imposed on that. So this way we find that it is the allowances can be categorized under the three categories, and I hope this is clear that they are taxable, partly taxable, or they are fully exempted. Now we come to understand them in detail. What are the allowances, variety of allowances that fall under all these three categories. So the first, as we discussed, that is taxable allowances. That is, as we said, that it is an additional benefit which is paid by the employer to his employee. Maybe it is the purpose of giving these allowances is to meet their is to let them meet their personal or work related expenses. However, certain allowances are fully taxable under the head income from salaries as per the Income Tax Act 1961. These allowances are added to the employee's total income and taxed according to the applicable slab rate. So there are some detailed examples which are most commonly fully taxable allowances. First is dearness allowance and dearness pay. What is dearness allowance? As I already said just now, it is one of the most widely provided allowance. It is attached to almost everyone's salary. It is meant to compensate the employee for the rising cost of living due to inflation. And actually, what happens that when the inflation takes place, things becomes more costly, and then whatever basic salary or other components of salary clubbed together, they will not be able to fulfill the need of the employee in the same way as they did in the previous months. So in order to compensate that loss, to meet that inflation cost, this allowance is given. That is called the dearness allowance. So it is to keep your basket of consumption intact, your satisfaction level intact. This dearness allowance is paid. So it is generally calculated as the that is the computation part, calculated as a percentage of the basic salary and is revised periodically. That is, every 6 months the inflation is calculated, taking into consideration the relevant and present market condition, the price level, etc. And when this inflation is declared, then on the basis of this rate of inflation, the dearness allowance is also announced for the employees. It's almost mandatorily done with the central government employee and the state government employee. So it is periodically revised. DA is fully taxable for all the employees, whether it is paid under the terms of employment or not. It is given under the terms of employment if forms part of salary for purpose such as continuing exemptions for house rent allowance, etc., or maybe RPF also, or gratuity, and there are other, as well as value for calculating the rent, valuation of the rent-free accommodation, etc. If part of DA may also be treated as dearness pay, which is taken into account for retirement benefit like pension or gratuity. So sometimes, DA, a part of DA will be treated as dearness pay also. In some specific heads, then we use it as dearness pay. We can understand it better with the help of an example. Suppose Mr. Arjun, a government employee, receives a basic salary of rupees 60,000 per month and a DA of rupees 12,000, that is 20% of the basic pay. Then this entire 12,000 will be taxable as salary income. So I hope this DA or dearness allowance is clear to all of you. Then coming to the next, that is fixed medical allowance. A fixed medical allowance is paid to employees to cover their regular medical expenses irrespective of the actual amount spent on medical treatment. The entire amount, whatever is received, is fully taxable, whether or not the employee incurs any medical expenses. For example, if the employee receives rupees 2,000 per month as medical allowance, the entire 24,000, that is 2,000 into 12 months, 24,000 for that year will be included in the taxable salary. There is no exemption on this. Similarly, we have tiffin or meal allowances. In tiffin or meal allowances, this allowance is paid to meet the cost of lunch or the tiffin or refreshment during the working hours, because if the company needs that the employee should stay back, it wants that the employee should not waste the time in going home or maybe somewhere else to have lunch and come back. So what they do, they provide the lunch facility, or they provide the tiffin facility, or maybe the whole day they provide the refreshment facility, that is, anybody wants to have tea, coffee or some snacks, then they can always have it. All those is provided in order to keep their employees remaining in the place and working instead of going out to eat something. And this allowance is also for the employee loyalty factor. It plays an important role in that. So this, whatever amount is paid in that, it is fully taxable. For example, suppose an employee in a company receives 1,500 per month as tiffin allowances, and totally it comes to annual basis, we compute it is 18,000 per annum. It will be added to their taxable income. Next is the servant allowance. Servant allowance is provided to the employee to meet the expenses of engaging a personal servant or domestic help. Sometimes companies allow that, maybe because of the nature of job, or maybe other specific situations, they allow servant allowances, that they can keep one helper or domestic help for engaging their personal servant or maybe domestic help. In that case, whatever amount they receive, it is fully taxable on and if it suppose the company pays 5,000 per month as salary allowance, then it makes 60,000 annually. It is completely taxable. Then we also have non-practicing allowances. This allowance is typically paid to the doctor in government services who are prohibited from engaging in private medical practices. It compensates them for this restriction, that is non-practicing allowances. Actually, this allowance is given to discourage the doctors specifically to not to work in their own private hospitals or start their own hospitals. So in addition to whatever salary they are given, they are also compensated for that, maybe for not doing private work or private job somewhere, or maybe having their own practice at home after the working hours, office hours, or after the hours of in the hospital. Suppose a person, a doctor, he starts a clinic in the evening for 2 hours or 3 hours after he comes back home from his government hospital. In that case, in order to discourage that, because this leads to misuse and maybe exploitations of situations. So in order to do away with this and discourage this practice, the companies, they pay them non-practicing allowances, but they are fully taxable and they form the part of the salary income. For example, a government doctor, he receives 10,000 per month as non-practicing allowances, will have the full 1,20,000 per annum, which will be included in his salary and will also be taxable. Similar, we have the hill allowances. Hill allowances, for example, many a time, the employees, they are posted in hilly or high altitude regions. They receive these allowances to meet the higher cost of living in such areas, and also to maybe to meet the uncomfortable uh, living situations and living conditions in those areas. Suppose maybe it is high altitude, maybe it must be very cold, or maybe they witness bad weather almost most of the part of the year. So therefore, to compensate that, this hill allowance is provided to them. It is fully taxable if the posting is below 1,000 meters above the sea level. Maybe partial exemption may apply for posting above this height, that is beyond 1,000 meters from the sea level, under Rule 2BB, the capital B, of the income tax rules. For example, if the employee is posted at 800 meters, he receives rupees 3,000 per month as hill allowance, then entire 36,000 is taxable income. Then sometimes you must have seen in the university system, in the colleges, we have wardens, and wardens to take care of the residential students. And similarly, we also have proctors who take care of the discipline, law and order in the campus, in the university and in the colleges. Now these two, anybody who, it is among the teachers usually who undertake these duties. So this is in addition to their main work, and therefore in all the educational institutions, the faculty members or the administrative staff who take on additional responsibilities, for example, maybe wardens taking the hotel management part, or the student discipline or the faculty discipline, they take up the proctorial role. They are paid such allowances, which are called warden allowance and proctor allowance. Once they receive these allowances, they become fully taxable. Both are fully taxable. For example, suppose a college warden, he receives 6,000 per month as warden allowance, will have the entire 72,000 per year added to the taxable income. After warden, we have the deputation allowance. Deputation allowance is granted when an employee is temporarily sent to sent on deputation to another department or organization or city for official duties. It is fully taxable, obviously. We can take an example of, suppose a person is working, or maybe a teacher is working in a central government school, and or maybe in a central university. Now there was an opening in some other government department. Maybe it is the ICSSR, or maybe it is the Ministry of Education, or maybe UGC, and he finds that maybe he can apply and join, and he joins there. So there was an obviously there's an opening for that, and when he qualifies the interview and he joins there, it is on deputation, and whatever he gets as a deputation allowance, that will be allowed, that is all taxable. There's no exemption for that. For example, maybe a person who's working like this, he receives rupees 8,000 or 10,000 as deputation allowance, maybe during 6 months of deputation, then full 48,000 will be a taxable amount. Overtime allowances, as I said, it is employees who work beyond their normal working hours. They are paid an overtime allowances as compensation for the extra time they have put in. So this is also maybe to motivate them, or maybe to because once they are paid, they do not stay back, they do not try to resist back from work overtime. So in order to motivate people, or in order to encourage the people to do the overtime work whenever it is needed by the company, they are paid, which is called overtime allowances. And this overtime allowances, whatever is received, it is fully taxable. Suppose a person gets rupees 15,000 as overtime, as he has been working overtime almost for a complete month, then this 15,000 will be fully taxable. Then apart from these long list of allowances, there are some others also. Maybe we can understand some of the, suppose apart from these whatever we have discussed just now, employees might receive various other allowances depending on the nature of the job or organization. That what is your nature of job? For example, is it you are working in a hazardous situation, or are you working in some underground fields, etc. So unless it's specifically exempted under the Income Tax Act, these allowances will also remain fully taxable. For some good examples are, for example, fully family allowances for armed forces personnel serving without family, whenever they have field postings especially. Then there is a project allowances for all those people, or all those employees who are also working on certain specific projects. Then there is a marriage allowances as a special grant on marriage. We have rural or tribal allowances also. Sometime, the employees, they do not want, everybody wants to stay back in the urban cities for the posting because of the convenience, because everything is close by, and they have lots of things that are easily available in urban areas, but they do not want to move on to the rural areas, so they are given certain rural or tribal area allowances, for which in order to encourage them, or in order to make it a choice and stay back, because obviously we need some people to work there also. Then city compensatory allowance, as we also already mentioned, to offset the high cost of living in the cities. Then we have the telephone allowances for communication expenses. I remember when we had landlines. Now they are rarely seen in the offices because everybody has switched on to mobile phones. But still, this telephone allowance was provided so that you can continue your business more productively. Then there is also health or holiday allowances for maybe leisure of the employee in their free time, or maybe general well-being. Actually, it is found that if the employee is working rigorously throughout the year, day after day, month after month, the life gets very monotonous. And once it is monotonous, the productivity and the efficiency of the workers is impacted, and therefore they are compensated for this. That is, okay, you take a break and you just go out for leisure, or you just go out for fun, and for a change, you are physically and mentally refreshed before you rejoin your job. So here, whatever is paid for health or holiday allowance is for the well-being of the employee. And suppose it is also including the health, means maybe regular checkup, uh, maybe it is not due to some diseases, but just a routine checkup to just take caution and be careful for their employees. So these expenses are included in any other allowances. Then we have a special qualification allowance. That is, if somebody possesses a very special degree or very special skills, maybe it is rare and it is difficult to find that talent in that domain, in that area, then it becomes very difficult for then we, in order to attract those specially skilled people, or though degree, we have to pay this allowance in order to attract them. Then special qualification allowances are for employees with, sorry, all these allowances are taxable and are specifically exempted under Section 10 of the Income Tax Act, or Rule 2BB. So that means whatever example I mentioned just now, that is family, project, marriage, rural, city compensatory, telephone, health or holiday, etc. All these allowances are there, but they are fully taxable. But the main objective of these allowances is to improve the quality of life of the employees, in order to not only improve the quality of life, because once the quality of life is improved, automatically it will impact the productivity of the employee, and once it impacts the productivity, it impacts of the quality of work also at the same time. So everything, there is a loop. It is called a loop, that more paid, more well taken off, mentally more satisfied, consumption level is good, and therefore that person sticks to the organization. And so there is an employee loyalty, there is an credibility, there is more productivity and efficiency in turn. So we can say that, to conclude about these fully taxable allowances, we may say that all allowances that are not covered by any specific exemptions under the Income Tax Act, they are all fully taxable. So that is, they are not covered by any specific exemption. Okay, this has to be remembered, and we find this in almost all. So these allowances, though they are intended to meet certain specific expenses, they form the part of employees' gross salary, and they are included in the computation of the taxable income. One thing here has to be kept in mind, that these allowances which are there, they are included in the computation of taxable income. We have to consider that they are calculated or computed in the correct way also, before taking the final figure for taxation purpose. So that is all for this session. Thank you.